Today we're going to be talking about one of the most popular and consistently repeatable patterns, and it's also one that's been around forever but can often be misunderstood. Hey everyone, lead trainer with Stocks to Trade, Tim Bowen here. Be sure to like, subscribe, share these videos with your friends, and also ring that bell. I go live almost every day breaking down the patterns exactly like what we're looking at today. Would love to see you get notified so you can jump on right away. That being said, if you're looking to take your trading to the next level, definitely check out the Steady Trade team. It's a mentorship program where I work with Mike Huddy and other mentors to do twice daily webinars breaking down these types of patterns, the news behind these patterns, because that is a key part of this pattern, as well as the volume, the technical indicators, all these pieces of the puzzle that really can shortcut your path to success. So check out the Steady Trade team. All right, so today we're going to be talking about the ABCs of the ABCD pattern, okay? Many of you might have heard of the ABCD pattern. It's one of, I think back to when I first started learning day trading, active day trading. I was more of an investor before 2007, 2008, but I go back to 2007, 2008, and this is one of the first patterns I started hearing about was this ABCD pattern, which actually I was on a webinar with my one of my associates, Matt Monaco. Many of you might know Matt from working with me on the podcast and other projects with Stocks to Trade, and he actually referred to it as the gun pattern, and evidently the gun pattern's been around forever too. So it's always kind of funny. It just depends on how you get introduced to something. And then the other thing you want to keep in mind is today I'm talking the ABCD pattern, but this is very, very, very similar to that VWAP hold high a day pattern I talk about a lot. So be sure to check out the other videos because it's really kind of the same pattern. It's just I add in VWAP. To me, with the ABCD, it's kind of like Salt Bae sprinkling a little something on the ABCD, and that something is the salt, as they say, is VWAP. So that being said, let's get back to ABCD. So what we're looking at here is a stock that is spiked big in pre-market. So you can see I've got OCGN from July 27th, 2020, if you want to kind of follow along. So what you see this stock, opens up at 44 cents. Now it also dips at the open, which you'll want to know that's a different pattern. We won't talk about the dip and rip today, but what's great about these stocks, I don't want to get too off topic, but this stock is what we call that dip and rip pattern. So that's the great thing about these. Keep in mind, what's great about the ABCD pattern is if you miss that dip and rip in the morning, the ABCD is more of an afternoon pattern, which I think is great for new traders or part-time traders. I mean, I think back to when I first got started, 90% of my focus was on the afternoons. I'd run my scans in the morning, I'd build my watch list in the morning, but most of my trades were in the afternoon because after the market opened, I'd have to get some work done. I had a business, but maybe you got to get some work done for the boss to make it look like you're earning your paycheck. Meanwhile, you're learning day trading on their dime, but I won't tell them. Trust me, I won't tell your boss. But anyway, let's say you miss that dip and rip, and then you get that big spike out of the gate. So that is your A at that point, okay? So A is the post-market high of day. That's the area that we're looking to basically target against for our entries into the afternoon. So as the stock kind of sets that midday low area, that becomes our B. Okay, that is the area that we're now going to use as a fail area. Okay, because remember, no trade is a trade unless you have a plan. Okay, if you're just buying and hoping it goes up, or you have no stop loss, it's not a trade. You're gambling. So now that area becomes B. Then what we look for, our entry, is now that reclaim of that high of day, that C area. Okay, that's our entry. Which the great thing about this, you'll see. Many of you know one of my favorite times to trade every day is that 2 p.m. window. so many of these stocks will make this ABCD move into the 2 p.m. window. And I say window because 2 p.m. is like kind of like 1 to 3:30, but we call it that 2 p.m. window. You'll see them hit that area so many times. And what you're looking for is your confirmation on your volume. Look at that highest volume candle of the day. That, I mean, it's no surprise to me that this stock ultimately ripped through the high of the day when you get that kind of volume, because that volume gives you your confirmation as well. Then your goal is your D, which would be based off of 3-to-1 risk to reward. So now you're not always going to nail your 3-to-1 risk to reward, but let's say you entered this at 58 cents, the high of the day. You're going to risk down at 52. Your goal would be in that 18 cents-ish a share of risk to reward, which basically is exactly what OCGN hit, going from 58 to 76, which is 18 cents a share. But, you'll never get the top, but, maybe you get 17 cents or 16 cents a share, which when you're risking 5 or 6 cents a share, that is exact risk to reward you're looking for. So what's great about this pattern is you've got a goal, you've got a risk to reward, you've got a realistic expectation. You're not trying to make 1,000%. You're not trying to make 1,000,000%. You're simply trying to risk off of a specific predetermined level that was determined by the chart pattern. You have a clear entry. I mean, that high of day, that break of the pre-morning's high is a clear entry. You can set an alert there, which is, again, many times what I would do when I was a part-timer, is I would set that alert to ping me and say I'm working on something else. Maybe I'm on the phone, maybe I'm working with an employee or a coworker, and I hear that ping. I know, it's like, kind of like when the bear is coming after you, you don't have to outrun the bear, you just have to outrun the other guy. So it's like you shove the associate you're working with and get back to the computer and let the bear deal with them. But corny analogy, but we'll see if it works. That being said, you've got that entry. You now know what you're looking at. And then one of the biggest things I love about this pattern is if you're a new trader, even intermediate, maybe you're new to these volatile stocks, one of the biggest issues you're going to have is sticking to a stop loss, sticking to, minimizing your minimizing your losses, maximizing your gains. And what I love about this pattern is it just gives you such a clear risk to reward, okay? No offense, and I'm not here to be a jerk, okay? You guys know I'm Mr. Positivity. I want to help you out. But if you buy the C level and it breaks below B and you don't stop out, I mean, that's just on you. Ultimately, that is on you. You broke the plan. The stock told you the risk to reward level. It told you the area where the idea was broken, okay? Keep in mind, nobody loves the ABCD pattern more than I do. Nobody loves the dip and rip more than I do. Nobody loves the VWAP hold high daybreak more than I do. But nobody loves a morning panic dip buy more than I do. But no pattern is guaranteed. And if this stock breaks 58, maybe some news comes out, maybe the market turns to the south, maybe it's just profit taking, and it breaks below that B and you're still in it, you, my friend, are officially a bag holder, okay? You, my friend, are not a day trader. You're not. Because you're not taking that small loss to potentially attack later. Look at, even in after hours, ultimately, this thing spiked up in after hours. You could have rebought that break even later in the day. The biggest thing about day trading, the biggest thing you got to realize, OCGN is not a good company. 99% of these stocks we trade aren't good companies. But the beauty of them are, when they follow the patterns, day traders react, the herd reacts, and there are inefficiencies in the market. And you will see this pattern repeat. Every day. Every day there's one of these. Now, it might not have enough volume to show up on your radar. It might not have news. It might not be in the hot sector. But I'm telling you, if you dig hard enough, you'll find an ABCD breakout every single day, assuming it's not like October 1987 and every stock is crashing. Okay. So, all right, everyone, keep an eye out for this pattern. It is, like I said, this might be it's tough to remember back 15 years ago, but this might be the very first pattern that really clicked to me. It just made sense that A, B, C, D. So it just makes sense. And it's one of the most logical and consistently repeatable patterns out there. So let me know. Give me a comment. Does this make sense? Does it make logic? Do you see the idea? Do you see that the progression and see how this pattern plays out over and over again? Do you trade the VWAP? Or sorry, I almost named my favorite pattern. Do you trade the ABCD pattern? Or do you add in VWAP like I do? That is the one delineation that I like to use. Is I know a lot of algos, a lot of HFTs use VWAP, and that's why I add it in. Or do you use to other technical indicators with the ABCD pattern? I would love to know. I'm always looking to learn, always looking to improve and get better. So, all right, everyone, have a great day. Be sure to check out our other videos. Got a ton of content talking about patterns, fundamentals, podcasts, tons of stuff. And check out the Steady Trade team, and I look forward to seeing you on the next video.